Travel is deductible only when you're away from home for business. That means you're gone substantially longer than a normal workday, and you need sleep or rest to meet work demands. On the EA exam, they'll try to sneak in commuting and call it travel. Commuting from home to your regular work location is personal, not deductible. True business travel costs are generally 100% deductible. Substantiation is the other landmine. You need adequate records showing amount, time, place, and business purpose. Receipts are generally required, but there's a key exception. Expenses under $75 don't need a receipt, except lodging. Lodging basically always needs documentation. On exam questions, watch for no receipt facts and whether the item is lodging or not. Per diem is a record-keeping shortcut, mostly for employees. An employer can reimburse employees using federal per diem rates instead of tracking actual meals and incidentals. If the employee submits an expense report under an accountable plan, the reimbursement isn't wages. Here's the twist. Self-employed taxpayers can't use per diem for lodging. They can only use per diem for meals. That difference is tested constantly. Vehicle deductions split into two methods: standard mileage or actual expenses. If you take standard mileage, you can't also deduct gas, oil, repairs, or insurance, but you can add parking fees and tolls on top. Actual expenses require business use percentage, like mileage logs, and you multiply total costs by business use. EA exam tip: they'll give you total expenses and business percent and see if you compute the right method. Sometimes standard mileage is flat out prohibited. If the business operates 5 or more cars at the same time, that's a fleet, no standard mileage. Also, if the car had Section 179, bonus depreciation, or depreciation other than straight line, standard mileage is out. And if you claimed actual expenses for a leased car, you generally can't switch to standard mileage for that lease. These are classic disallowance trigger questions. Business gifts have a tiny limit, $25 per person per year, and spouses are treated as one taxpayer for that limit. Also, a gift to a client's spouse is usually an indirect gift to the client, so it counts toward the same $25 cap. But shipping, packaging, insurance, and engraving can be deducted separately if they don't add substantial value. On the exam, they'll mix gift costs with shipping to see if you separate them correctly. Two more buckets to keep straight: charity and non-deductibles. Only C corporations deduct charitable contributions on the business return. Sole proprietors don't deduct charity on Schedule C. It's Schedule A if they itemize. Partnerships and S-Corp pass it through as separately stated items, and some expenses are never business deductions: political contributions, lobbying, club dues like country clubs, fines and penalties to governments, and personal legal fees. Supplemental wages are compensation paid in addition to regular wages. They do not include payments for which of the following: non-deductible moving expenses, travel reimbursements paid at the federal government per diem rate, accumulated sick leave, or vacation pay. Think about which item is typically not treated as wages when handled correctly. The correct answer is travel reimbursements paid at the federal per diem rate. Under accountable plan rules, properly substantiated per diem reimbursements generally aren't wages, so they're not supplemental wages either. A tempting wrong choice is non-deductible moving expenses, because the word non-deductible sounds like it shouldn't be wages, but it can still be compensation depending on how it's paid. Malcolm is a Schedule C realtor. He gives gifts: a $50 champagne to client 1, a $40 wine to client 2, a $30 earrings to client 2's spouse, and a $28 chocolates to client 3. He also spent $35 on packaging and shipping. How much can he deduct for business gifts? $110, $135, $183, or $153? Think about the per person limit and what costs escape it. The correct answer is $110. The gift limit is $25 per recipient per year. Client 1 is $25. Client 2 is $25, and the earrings to the spouse are treated as an indirect gift to the same client, so still $25 total. Client 3 is $25. Then add the $35 shipping and packaging, because incidental costs aren't subject to the $25 cap. A tempting wrong answer is $135 if you incorrectly allow $25 for the spouse separately.